Greetings traders, it's Kim Hong here. Today I'll be sharing with you guys one trade idea, okay, with a potential profit of 260 pips. Without further ado, let's jump in. Okay, so this trade idea is based on the pound dollar currency pair. Once again, decade high inflation pushes for a rate hike. Okay, yesterday, the UK Office for National Statistics, okay, actually released the inflation data for UK, all right, for the month of October. And guess what? They actually reported a 10-year high annual headline inflation level of 4.2%, okay? The expectation was for inflation to rise by 3.8%, okay? And back in October, all right, the released data was actually 3.1%, okay? And this time around, we are actually getting 4.2%, all right? That is like 1.1% higher than what was previously reported, okay? I mean, for the previous month. Okay, so with this strong rise in inflation, as you guys pretty much already know, that in the UK, inflation, well, actually is across the world, okay, inflation has been rising fast and furious, all right? But in the UK, the central bank, Bank of England, actually recently managed to sort of like convince the market that they are actually looking at a rate hike, okay? Although it may actually be carried out before their quantitative easing has ended, okay? So with that, you know, it all depends on the inflation, okay? Like what they actually mentioned in the monetary policy report, all right? If inflation gets to a level that is so high, then, you know, the Bank of England will have to rise interest rate to actually tame the rising inflation, okay? In their forecast, okay, in their projection materials, all right, the central bank is actually expecting inflation in the UK to hit around 5.0, all right? Early next year, during like probably like the first quarter of next year, 2022, okay? And then, okay, before eventually coming back down sustainably within the 2%, 2 to 3% target, all right? So right now we are seeing 4.2, okay? And 4.2, to be honest, is not far away from 5, right? Given that there was actually a 1.1% jump from the previous month, all right? So with that, the market, okay, at the moment is actually pricing in, all right? It's already pricing in an interest rate hike coming from the Bank of England during their December's meeting, all right? So it's actually going to be quite a bullish, I would say, action if the Bank of England were to carry out a rate hike in December, all right? When this piece of inflation data was released yesterday, all right, there was actually a strengthening of the British pound across the board, all right. And the day before, the ONS, Office for National Statistics, actually released the UK employment figures as well, and it was actually better than what everyone has expected. Okay, better in the sense that because with the recent ending of the UK furlough scheme, okay, the general consensus is that UK's employment may take a light hit, okay, from the ending of the furlough scheme, meaning, there may be some loss in employment, okay, loss in jobs for the month of October, okay. But when the data was released a couple of days ago, they actually show, employment gain for the month of October, as opposed to, a slowdown or an expected loss in jobs. Okay, so that actually, it did boosted the British pound 2 days ago, and then now with this strong, way higher than expected inflation data being released, it just, the rally just keeps going on. All right. That's what I'm trying to say. So with that, personally, I'm expecting a strengthening in pound. Okay, so that is actually the fundamental backings for this trade idea. All right, let me just show you guys the chart. All right, so over here, well, you can see that there's actually a few blue lines being drawn over here. It's actually the inverted head and shoulder pattern. All right, for those of you who have who trades patterns, okay, pattern formations like double top, triple top, head and shoulders, inverse head and shoulders, and things like that. You guys will probably know this is actually a inverse head and shoulder. So this part over here being the head, and then this left and right here being the shoulder. It's a little bit distorted, all right? But, we have a neckline over here which is slanted as well due to the distortion of the shoulders, okay, if you may. Then this neckline over here, once it's being broken, we can actually look for buying opportunities. As of right now, okay, it's already broken, all right? The pattern has already is already formed, and the neckline over here is already broken. However, okay, keep in mind that there is actually a, let me just add in a line here so you guys can see it clearly. It's the 1.35 handle, okay? So if you guys look at the chart, you will realize that price has actually traded towards this level and sort of like stagnated, all right? Sort of like stagnated, okay? Because you can see, let me just zoom in, all right? You can see that it was quite bullish, right? For the past 2 days or so due to the strong employment data and the strong CPI data, all right? But then you realize that, the candles get smaller and smaller, and, the higher high seems to be, not going much higher, okay, than the previous candle, okay? Signifying a stagnation in the rally, okay? And then you realize that this yellow golden line over here, this golden line over here is actually the 1.35 round level, psychological level, or key level, however you want to call it, all right? So usually at these levels, round levels, round number levels, round figure levels, the market may actually slow down a bit, okay, stagnate, price may actually stagnate a bit, and wait to see if there's any stronger conviction or any strong catalyst to push prices beyond the level, to breach above this round figure, okay? So at the moment, yes, we are seeing, like some of you will call this like dojis, small body candles with long upper lower shadows and things like that. So you can see that it's at the moment it's actually stagnating. So because of that, personally, I wouldn't actually carry out a buy trade once the neckline is broken, okay, which is right now, because of this I would say obstacle over here, the 1.35 level. So what I'm going to do, okay, in this case is to set my buy stop above, okay, in this case it's 30 pips above the 1.35 handle, all right? So that gives me some 30 pips of buffer, all right? So in a scenario whereby price were to break above this 1.35 level by 30 pips, okay, hitting the 1.353 buy level, then I'll be convinced that, this level has been broken, and thus the upside for pound dollar is high, okay? So yes, my entry level is at 1.35, okay, buy stop order. And then if this trade were to be triggered, all right, my stop loss would be around 1.335, which is this red dotted horizontal dotted line over here, which is some 180 pips, okay? It's actually below, okay, or behind this head and shoulder pattern, all right? It's actually for safety measure, okay? Then my potential take profit level, okay, would be at the 1.379 level, which is some 260 pips above my entry level, okay? So we have 180 versus 260, probably like we are seeing it probably some 1:1.5 risk reward ratio, okay? Again, once again, we don't have to wait for our trade to hit the TP level, okay, before closing it, all right? There may be some major news coming up, like, for example, okay, today is like November 18th, all right? The Bank of England, I can't remember when are they going to be meeting in December, okay? But this trade may actually last till December, okay, if it's being triggered, all right? So prior to the central bank's meeting, okay, I may actually close this trade for whatever amount of profits I have, okay? Or maybe even for a small loss, okay? Because, yes, although we are all expecting, the market is expecting a hike in interest rate because due to the super rise in inflation and things like that, all right? Remember, okay, that there are many possibilities that can happen during the meeting. Okay. Now, if let's say I were not to close my trade, then upon the release of the news, Bank of England decides to decides to hike interest rate by whatever amounts they decided to. We may actually see a further a very strong strengthening. Okay, very strong strengthening of the pound dollar. Okay, that is one possibility. That will be in our favor. However, okay, some of you may have heard of this saying, buying the rumor, selling the fact. Okay, so prices may have already been priced in. Okay, with this recent inflation and things like that, and for the next 2 weeks or so, pound may carry on strengthening until the point where Bank of England announces their rate hike. Okay, then we may actually see a weakening of the pound. Okay, it's not because the fundamental is weak in any way. Okay, it's because of what the market is doing. Okay, the traders, the market participants. All right, they probably close off their positions for whatever profits at that level. Okay, thus pushing the pound back down. Okay. Hence, there's this saying, buying the rumor, selling the fact. Okay, when it actually happens, it's the fact. There's a rumor. Okay, right now it's a rumor. Okay, it's a rumor that the Bank of England will be hiking interest rates. Okay, so people start buying the pound, buying the pound, buying the pound. Okay, and when the actual thing happens, it becomes a fact. All right, it becomes a fact. And when it happens, people just sell off the fact. Okay, sell based on the fact. So that's roughly what it means. Okay, so yeah, if these trades will be triggered, I'll update you guys again. And then any like for example, if there's any convincing reason for me to close my trade, okay, I will again update you guys again in our Traders Club platform. All right. So with that, I have come to the end of my sharing, and I'll update you guys again if there's anything. All right. So with that, I will see you guys again tomorrow during the currency call. Okay. Take care for now. Bye bye.